Hey folks, I want to quickly chime in here, just to kind of reiterate something that we've been talking about to our clients over the past week and a half or so, maybe 2 weeks, and that is that risk just seems very, very high in the short term. And I brought a couple charts along, and I want to kind of walk you through what our thinking is. Again, this is a very short-term oriented warning, really looking at it for the next few weeks into February, maybe through February. Where we think there's a lot of risk in particularly in the equity markets where there's a lot of froth. So let me quickly walk you through this, and I just brought a couple of charts. So risk is high in the coming weeks, and again, it's about the coming weeks. It's not about the next few months. We're actually very bullish through the second quarter of this year, but we think short term there's a lot of risk. So one of the things that we've noticed, and I think a lot of you guys have probably seen this, so I don't want to sort of beat a dead horse, but there's a lot of talk about that crazy move we've seen over the past few days in stocks like Gamestop and Bed Bath & Beyond rallying, who knows how much, basically short squeezing professional investors, hedge funds, and others that are caught short. Now, this has happened before. It's going to continue happening. It's nothing new, but of course, it is something that is rather concerning. To me, this is just another sort of part of what social media has contributed to some of the stock market world. There's a lot of good stuff that it's done, but it's also kind of exacerbating moves. Now, again, really, what is Reddit or Twitter? It's nothing more than that what used to be, let's say like a presentation through the lens of something on TV or message boards, right? Or newspaper articles where people were able to kind of read their comments. It's just an extrapolation of that in the modern era. So these short squeezes and crazy moves are nothing new, and quite frankly, we think the mania that we're seeing on part of the retail investors could continue for quite a bit longer, but I think in the very near term, it's probably about as crazy as it's going to get, as exemplified by these two moves. If you want to take this a step further, I want to talk about margin debt. This is the change in margin debt. So people basically taking up debt in order to, loans, if you will, to keep it simple, to trade stocks. A clear rally there in that's not a good thing if you want to look at this in terms of taking the other side of that, and it very much exemplifies of what's happening in moves like the one here before, where people are buying upside calls. Speaking of upside calls, we're seeing a lot of upside call buying. A lot of the concentration of buying is happening on the very short term, so people literally buying calls expiring a few days out. Which is just very, very, very risky. So we think the animal spirits here are really, really high. The put call to ratio has collapsed, which can continue to go lower through the lens of the next few months. But we think very short term, it's probably about as crazy as it gets. And I'm going to leave it here on this last chart here, which I think is something that most people don't understand because it's not very public. This is basically, and you don't have to go into the details of this, but it really talks about how there's a set of investors out there that are essentially betting on low or subdued volatility. When volatility spikes, or in this case, the example is a 2% move or 2% sell-off in equities, what happens is that people have to basically start selling at an accelerated rate. And it's called, some of these funds are called volatility targeting and all sorts of stuff. That's a bit beyond the scope of this video, but I want to at least get people aware of the risk that there is that when we do see mean reversion to the downside in equities, is very unlikely that it's just 2 or 3%. It likely very quickly ends up being 5, 10, maybe 15% in a very, very quick fashion. That's the thing we've seen over the past number of years as well. This is nothing new, but we think we're setting up for one of those kind of moves again. So, but again, beyond that, and we'll talk about this much more going forward. Beyond that, as we get deeper into or maybe to the latter part of the first quarter or so, and then into the second quarter, we think there's a lot of opportunity again. So. Hope this helps, folks, and I'll see you soon.